Hey everyone, and welcome back to Crypto in 5. Time really flies, doesn't it? We've officially made it to the final day of 2025. I know some of you might be staring at your portfolios and questioning your life choices right now, but I still want to wish you a very happy New Year's Eve. Let's put the messy market aside for a moment and ring in the new year. Looking back at 2025, Bitcoin finally hit the big leagues, but man, it really put us retail investors through the ringer along the way. We watched Bitcoin blast through to a record high of $126,000. It felt like reaching the top of a roller coaster. The view was amazing, and we all thought financial freedom was finally here, right? But then, boom, the floor fell out. That October bloodbath was brutal. Bitcoin basically got its legs cut out from under it with a 30% crash. So many people got wiped out in that move, losing years of hard-earned savings. Even today, on the last day of 2025, the price is just chopping around between $87K and $90K, really testing our patience. I bet you're dying to know, is this just a pit stop in the bull market or the start of a long winter? In 2026, will our bags turn into gold or will they just become worthless digital dust? Today's video is packed with insights. I'm going to walk you through Bitcoin's price action this year from start to finish and uncover the biggest opportunities for 2026. So make sure you stick around until the very end. All right, let's jump right in. If I had to describe this year's chart with one letter, it would be a giant M. It was a double top pattern mixed with a sharp V-shaped recovery. Do you guys remember the beginning of the year? Back when MicroStrategy was on a buying spree and the price was sitting comfortably above $100K. The vibes were pure euphoria. Everyone thought that with Trump back in office, the US was going to go all in on crypto, and the moon mission was finally on. But guys, the market has a way of humbling us. March 6th, that is a date we need to burn into our memories. That was the day President Trump signed the famous executive order on establishing a Bitcoin strategic reserve. This was supposed to be the ultimate bullish catalyst, right? The US government actually buying Bitcoin. But what happened? The script flipped. It was a classic buy the rumor, sell the news event. Why? Let's look at the fine print revealed in the report. That executive order had two major gotchas. First, it said they would just lock up the 200,000 seized Bitcoins they already owned, rather than our dream of them market buying billions of dollars worth. Second, and this was the kicker, it had a budget neutrality rule. What does that mean? It means the government can't just print money to buy coins. To buy Bitcoin, they have to find the money elsewhere or sell off gold first. It's like your spouse promising you, honey, you can finally buy that Porsche you've wanted. You're pumped, thinking you've finally leveled up. But then they add, but we can't touch our savings. You have to sell the old junk in the garage first and save up enough from that to buy it. Isn't that just moving the goalposts? So, all that degens with high leverage betting on an immediate pump, they got liquidated in an instant. The price crashed from over $100K down to $75K. That was a massive shakeout and our first big lesson in risk management this year. Then, the plot thickened in the second quarter, from April to June. Remember how hopeless everything felt when we hit $75K? Well, by mid-April, Bitcoin quietly staged a massive comeback. We saw a straight V-shaped recovery, punching through old highs and hitting $111,000 in May. What caused that rally? Global markets went into buy everything mode. The trade war started by the US hurt the dollar, which made everyone expect central banks to print more money to cope. That lack of faith in paper money pushed Bitcoin higher. October 6th was the peak of the year, but also where the nightmare began. Friends, that was the day Bitcoin hit its all-time high of $125,700. What was happening then? US spot ETFs alone saw over $1.2 billion flow in a single day. Can you imagine? $1.2 billion in 24 hours? The greed index was maxed out. Everyone was calling for $150K or $200K next week. But fate had other plans. That euphoria lasted only 4 days. Just 4 days. Then the black swan arrived. On October 10th, the US-China trade war hit a breaking point. Trump announced a 100% tariff on Chinese goods. Global stocks absolutely tanked. The Nasdaq took a dive, dragging the crypto market down with it. But that wasn't even the worst part. What really broke us was a collapse within the crypto ecosystem itself. Remember USD? That project calling itself an algorithmic stablecoin. At the time, everyone was using USD as collateral to trade. Well, liquidity on Binance dried up and USD lost its peg. It dropped to $0.65 at one point. It's like using a dollar as collateral. And suddenly the bank tells you your dollar's only worth 65 cents. The system panics and automatically sells your Bitcoin to cover the gap. That day, total market liquidations hit $19 billion. It was the most brutal wipeout we've ever seen. Bitcoin fell like a stone, dropping from $126K to $105K almost instantly. Since that crash, the market hasn't been able to find its footing. That's why we're still stuck around $90K. The market took a heavy blow and it needs time to recover. Now that we've recapped the drama, let's look under the hood. Why was 2025 so incredibly volatile? It all comes down to the global liquidity game. Here is a wild stat. By the end of 2025, the global M2 money supply, basically the total cash in the system, hit a record high of $130 trillion. With that much liquidity, you'd think everything would go up, but the problem is the money didn't spread evenly. China was fighting a slowing economy and printing money like crazy, accounting for 37% of that global growth. Even though that money is restricted, it still leaked into hard assets like Bitcoin. That's why Bitcoin often looks stronger during the Asian trading session than the US one. And the US? The Fed was hawkish, strict in the first half, then dovish printing in the second half. This flip-flopping left investors running left and right looking for a path forward. However, despite the price swings, this report shows that Bitcoin's market DNA has fundamentally changed. First, the ETFs are now the clear bosses of price action. Get this, in 2025, the amount of Bitcoin bought by ETFs was actually higher than the total amount of new coins created by miners. What does that mean? It means Wall Street swallowed every single new Bitcoin that came into existence. And they didn't stop there, they were also buying up the chips from long-term holders like us. Second, we saw a shift in how companies hold Bitcoin. MicroStrategy isn't just buying blindly anymore. They set up a USD reserve pool. This is a smart play. Having cash on hand stops them from panicking. They don't have to sell their Bitcoin just to pay their bills. It's like a shock absorber for the price. Okay, enough about the past. Let's get to the main event. I know what you're really here for. Is the game still on for 2026? Will Bitcoin keep going up? Here is my take. In 2026, Bitcoin will go through its great decoupling and finally become a mature asset. Sounds a bit fancy, right? Let me simplify it. In the past, Bitcoin followed the Nasdaq like a shadow. If tech stocks went up, Bitcoin went up. If Nvidia tanked, Bitcoin tanked. People traded it like a risky tech stock. But in 2026, that link is going to snap. As central banks start looking at Bitcoin as a reserve asset, the way it's priced will change. It's going to start acting more like gold and less like a tech stock. There are three big themes that will set the market on fire in 2026. First, sovereign FOMO. What is FOMO? The fear of missing out. Think about it. Even if the US is buying slowly, they've already put 200,000 coins in their vault. The US has basically put its cards on the table. How do you think other world powers or big wealth funds will react when they see that? It's game theory. To protect themselves against the dollar, they will be forced to buy Bitcoin too. It's not because they want to, it's because they have to. That's a massive wave of money. Second, bank-issued stablecoins. Have you guys heard of the Genius Act? This is a huge deal. This law is expected to pass in 2026. Who does it allow to issue stablecoins? The big banks. Imagine JP Morgan or Citibank issuing their own digital dollars. What does that mean? It means trillions of dollars from the traditional financial world can flow into crypto instantly. That is the real flood of capital. Third, the death of the 4-year cycle. Old school traders are used to the 4-year halving cycle, but 2026 might be the year that pattern breaks. Because institutional money is so massive now, the selling pressure from miners barely moves the needle. From now on, if you want to know where Bitcoin is going, you watch the macro and the big governments, not a halving countdown clock. All right, time for the price targets you've been waiting for. Based on the top Wall Street firms, we have 3 possible paths. Which one do you want first? Let's start with the bear case, the bad news, just to keep things realistic. There's an analyst at Bloomberg named Mike McGlone. The guy is a permanent bear. He thinks if the trade war causes a global depression, Bitcoin could crash all the way to $10,000. Wow, $10K. If that scares you, don't lose sleep over it. This is a very out there view, and most experts think it's highly unlikely. Now, what about the bull case, the moon mission? JP Morgan and Fundstrat believe that if the US government starts buying coins on the open market and the big bank money flows in, Bitcoin will blast past $250,000 in 2026. $250K. Guys, that's nearly triple where we are now. So, what is the most realistic middle ground? Analysis from Bitwise and Grayscale suggests that as regulations get cleared up and big players keep buying, Bitcoin will climb steadily, break its old highs, and land somewhere between $140K and $160K. This is a much more grounded and achievable goal. But I have to give you a reality check here. I've got to be honest, these scenarios and price targets are just educated guesses based on current data. You know how it goes. Wall Street analysts change their minds faster than a politician breaks a promise. Remember the start of 2025? Didn't a bunch of experts swear we'd hit $200K by now? And look what happened. The market proved everyone wrong. So, please, think for yourself and do your own research. Do your own research. Your money didn't grow on trees. You worked hard for it. These predictions are just food for thought, not a sign from above to bet the house. All right, looking ahead to 2026, where do you see Bitcoin going? Are you leaning toward Bloomberg's $10K or JP Morgan's $250K? Are you betting on sovereign FOMO or worried about a global depression? Drop your target price in the comments below and let's see who gets it right. If you enjoyed today's deep dive, please give this video a like, subscribe to the channel, and hit that notification bell. This is Crypto in 5, sticking with you through the highs and the lows. See you in 2026. Bye for now.